Bitcoin has recently achieved an unprecedented price milestone, breaking through previous all-time highs and capturing the attention of investors worldwide. This surge is not just another spike, it represents a significant shift in how Bitcoin is perceived in the global financial landscape. For years, Bitcoin was considered a niche asset, popular mostly among tech enthusiasts and early cryptocurrency adopters. However, as it steadily gained momentum, Bitcoin has proven itself to be far more than just a speculative investment. Today, it stands as a serious contender in the world of finance. One of the primary drivers behind this record surge is the weakening value of traditional fiat currencies, especially the US dollar. As inflation rates rise and central banks continue to pump liquidity into the markets, investors are increasingly searching for reliable stores of value. Bitcoin, with its fixed supply capped at 21 million coins, offers a unique hedge against inflation, something traditional assets like cash and bonds cannot guarantee. The growing scarcity and limited supply of Bitcoin have made it a highly attractive asset. Unlike fiat money, which governments can print at will, Bitcoin's supply is predictable and deflationary by design. This scarcity combined with increasing demand has created powerful upward price pressure, pushing Bitcoin to new highs. Moreover, global economic uncertainties have played a huge role. Political instability, fluctuating interest rates, and ongoing concerns over economic recovery post-pandemic have made many investors look beyond conventional markets. Bitcoin's decentralized nature and independence from any single government or financial institution make it a refuge during turbulent times. Another factor contributing to this milestone is the surge in institutional interest. Hedge funds, asset managers, and even pension funds are now buying Bitcoin in significant amounts. This influx of capital has added legitimacy to the market and introduced new layers of stability and growth potential. In summary, Bitcoin's record-breaking price reflects more than just market hype. It symbolizes a new era of digital finance, where Bitcoin is becoming recognized as digital gold and a credible asset class. This milestone could be the foundation for even greater adoption and innovation in the crypto ecosystem. In recent years, Wall Street has dramatically shifted its stance toward Bitcoin and cryptocurrencies. What was once viewed with skepticism and caution is now being embraced by some of the biggest financial institutions in the world. This acceptance marks a pivotal moment in Bitcoin's journey from a fringe digital asset to a mainstream investment vehicle. Historically, Wall Street firms stayed away from cryptocurrencies due to their volatility, regulatory uncertainty, and lack of clear infrastructure. However, as Bitcoin matured and the market grew deeper, major players began to see the potential opportunities. Leading asset managers like BlackRock, Fidelity, and JP Morgan have not only started to include Bitcoin-related products in their offerings but have also been actively investing in the crypto ecosystem. BlackRock, the world's largest asset manager, made headlines by filing for Bitcoin ETFs and publicly acknowledging that Bitcoin has a place in diversified portfolios. Similarly, Fidelity has been a pioneer by launching cryptocurrency custody services and offering Bitcoin funds to institutional investors. Even JP Morgan, once skeptical, now provides Bitcoin exposure to its clients and explores blockchain technology applications. This Wall Street embrace is about more than just adding a new asset to their portfolio. It represents a vote of confidence in Bitcoin's long-term viability and stability. Institutional involvement brings with it significant capital inflows, professional management, and regulatory compliance. These factors help reduce market volatility and build trust among retail investors. Furthermore, Wall Street's participation is accelerating the development of financial products linked to Bitcoin. We are seeing a growing number of Bitcoin futures, options, and exchange-traded funds (ETFs) designed to meet the needs of traditional investors. These products make it easier for pension funds, endowments, and hedge funds to gain exposure without directly holding the cryptocurrency. This trend also signals a broader acceptance of cryptocurrencies as an alternative asset class. As Bitcoin becomes integrated into mainstream finance, it challenges traditional notions of money, banking, and investment. The institutional embrace is helping to bridge the gap between legacy financial systems and the emerging digital economy. In conclusion, Wall Street's embrace of Bitcoin is a landmark development. It not only fuels Bitcoin's price growth but also legitimizes crypto as a serious investment. As these institutions continue to adopt and innovate around Bitcoin, we can expect even greater adoption and stability in the years ahead. One of the most significant catalysts behind Bitcoin's recent surge has been the approval of Bitcoin exchange-traded funds, or ETFs. This milestone has opened a new chapter in the cryptocurrency's journey, making it far easier and safer for traditional investors to gain exposure to Bitcoin without the complexities of owning and storing the digital asset directly. ETFs are investment funds traded on stock exchanges, much like stocks, and they track the price of an underlying asset, in this case, Bitcoin. Before ETFs, buying Bitcoin typically involved navigating cryptocurrency exchanges, digital wallets, and security concerns, which deterred many mainstream investors. The arrival of Bitcoin ETFs has simplified this process, offering a familiar, regulated, and convenient vehicle for investing in Bitcoin. The approval of the first Bitcoin spot ETFs by regulatory authorities, especially in the United States, marked a turning point. These ETFs provide direct exposure to Bitcoin prices, unlike futures-based ETFs, which track derivative contracts and sometimes introduce additional volatility. Spot ETFs allow investors to buy shares that represent actual Bitcoin holdings, improving transparency and confidence. This regulatory green light has unleashed a wave of institutional and retail investor interest. Pension funds, mutual funds, and hedge funds, which were previously restricted from investing in cryptocurrencies, now have a clear and compliant path to include Bitcoin in their portfolios. This broader access means a significant influx of capital is entering the Bitcoin market, pushing prices higher and increasing liquidity. Moreover, the ETF structure enables easier portfolio diversification and risk management for investors. With Bitcoin ETFs, investors can quickly buy or sell Bitcoin exposure during market hours without worrying about the technical aspects of digital wallets or private keys. This convenience is critical for attracting traditional financial players who prioritize regulated and straightforward investment products. The momentum sparked by ETF approvals is also driving innovation in the crypto investment space. New ETF products are being proposed and launched, offering Bitcoin alongside other digital assets like Ethereum, allowing investors to diversify within the crypto sector itself. This evolving ecosystem further legitimizes cryptocurrencies and integrates them into everyday investment strategies. In summary, the approval of Bitcoin ETFs has been a game changer. It bridges the gap between traditional finance and the crypto world, removing barriers for investors and fueling a surge in demand. As more ETFs gain regulatory approval globally, this momentum is expected to accelerate, supporting Bitcoin's continued growth and mainstream adoption. A remarkable trend shaping the future of Bitcoin and cryptocurrencies is the transformation happening within corporate treasuries. Increasingly, leading companies are reallocating part of their cash reserves into Bitcoin, recognizing it as a strategic asset that can protect value and offer growth potential beyond traditional financial instruments. This corporate treasury transformation began making headlines when MicroStrategy, a publicly traded business intelligence firm, took a bold step by converting hundreds of millions of dollars of its cash holdings into Bitcoin. Their CEO, Michael Saylor, became one of Bitcoin's most vocal advocates, emphasizing Bitcoin's scarcity and its role as digital gold. MicroStrategy's move was a wake-up call for many corporations and investors, highlighting Bitcoin's potential to serve as a hedge against inflation and currency devaluation. Following MicroStrategy's lead, other corporations have started to include Bitcoin in their treasury strategies. Tesla famously purchased $1.5 billion worth of Bitcoin in early 2021, sparking widespread media attention and inspiring other companies to consider cryptocurrency as part of their balance sheets. More recently, firms like Block, Galaxy Digital, and even some hedge funds have disclosed substantial Bitcoin holdings. Why are these companies shifting towards Bitcoin? The answer lies in the changing global economic landscape. With central banks pumping unprecedented amounts of liquidity into markets and inflation concerns rising worldwide, holding large amounts of cash can erode purchasing power over time. Bitcoin's limited supply of 21 million coins provides a deflationary asset that offers a potential store of value and diversification benefits for corporate treasuries. This transformation also signals growing confidence in the infrastructure supporting Bitcoin. Companies are increasingly comfortable with secure custody solutions, regulatory clarity, and accounting practices surrounding cryptocurrency. Institutional-grade custodians and auditors have developed tools that make it safer and easier for firms to manage Bitcoin holdings alongside traditional assets. Moreover, adopting Bitcoin aligns with many companies' forward-looking vision. Beyond financial benefits, it demonstrates innovation and adaptability, appealing to investors, customers, and employees who value digital transformation and modern financial strategies. In conclusion, corporate treasury transformation is a critical factor driving Bitcoin's ongoing adoption and legitimization. As more companies diversify their reserves with Bitcoin, it solidifies the cryptocurrency's status as a valuable and strategic asset in the modern economy. This trend is likely to accelerate, contributing to Bitcoin's growth and mainstream acceptance in the years ahead.